Welcome back to Fast Market here on the Schwab Network. It's time to talk big tech. We're going to take a look at Meta Platforms. Stocks up over 9% so far just this month off all-time highs we hit last week. Let's bring in Caroline Wood, senior markets correspondent, here to help us break this stock down. It seems like they're kind of pushing back against all the turmoil that we've seen in a lot of the tech names over the past month, Caroline. But give me your take here on Meta Platforms.
Well, Meta is the best performer of the Mag 7 in August, up about 9.5% this month. Under pressure today, down about 1.5%. But Nvidia, of course, is the highlight this week. Dan Ives called it the most important tech earnings in years, and it's not the first time expectations have been high heading into that report. Obviously, back in May, expectations were lofty as well, and Nvidia managed to beat and really ignited that broader tech rally. So I think the big question for Nvidia and some of the other Mag 7 is how much is priced in at these levels, especially since whereas some of the other Mag 7 have been under pressure this month, Meta is still positive and is the outperformer. So will there be carryover? This earnings season has taught us that hyperscalers continue to spend big on AI, and that obviously benefits Nvidia. But now the conversation's all about the return on AI, the ROAI, and I think Meta and Mark Zuckerberg did a good job of really breaking that down, the benefits when they actually reported earnings. Meta had said, Meta's obviously one of those big spenders, forecast significant CapEx growth in 2025, but Mark Zuckerberg did a good job of justifying that spending, hence why we're seeing the stock higher this month, telling investors, I'd rather risk building capacity before it's needed rather than too late, given the long lead times for spinning up new infrastructure. He also pointed to ways that all of that spending on AI is already benefiting its core business, which of course is digital advertising. Advertising revenue in the quarter came in better than expected, with higher average prices per ad and more ad impressions across all of its apps. So Mark Zuckerberg had said that its AI offerings were making advertising more effective. So, we've seen that all boost shares up until now. What could also boost shares, of course, remember back in the day for Meta when it was all about how much they were spending on the metaverse, its Reality Labs division. It seems like Wall Street has sort of given a pass to the big losses that Reality Labs division has been facing. But there is this report from The Information that they're actually going to be canceling plans for a premium mixed reality headset, which was supposed to go up against Apple's $3,500 Vision Pro. So Meta limiting some of those losses might also be bullish for shares. But of course, in terms of what's priced in and how much room is there to go, of course, I turn to the analysts community for that. I was taking a look at the analyst breakdown, given the fact that you had already said Meta Platforms up 47% year to date, up more than 82% over the past 1 year, and 87% of analysts still have a buy rating on shares, and the median price target is $570, so about 10% upside from current levels. That being said, the street high in terms of price target is from Wells Fargo at $647, so they see 25% upside from current levels. So still a lot of optimism for a name like Meta, despite the fact that it's under pressure today.
Caroline, you mentioned that it's all about advertising, and 98% of their revenue comes from advertising. So as long as we're in a market where digital ad spend is expanding, they get kind of a pass on some of their spending. But their cost discipline is going to be the key. They have, the way I see it, they offer four things, right? They offer the number of their users, they offer their engagement, the time spent per user, they offer their ad frequency, the ad per time spent, and they offer the monetization, the dollars received per ad. Those are the four things. Then they're spending money on, all these other places, but as long as they can sell those growth prospects to advertisers, keep the advertising money coming in, they should get a pass on a lot of the spending. And as it bumps up against that in the 540s, it seems to stall up there a lot. And we're only 5% off that, Caroline.
Well, and because digital advertising is so important to the company, I think the fact that those AI investments are already showing tangible improvements for the ad business is what has Wall Street so bullish on shares? I was going back to the earnings call transcript, and Mark Zuckerberg was saying the ways that it's improving recommendations and helping people find better content, as well as making the advertising experience more effective. I think there's a lot of upside there. So in turn, we saw a lot of bullish commentary following earnings from Meta. I think it was Barrett that said, should it change its name to AI? They were talking about years of AI-related investments, benefits from that. Meta is the top AI play in consumer internet, just in terms of a few analysts' comments, within the past month or so following these results. So I think that that's really where a lot of the bullishness lies. Obviously, it's not without headwinds. If there's any pullback in digital advertising spending, that of course might not bode well. But it's also continuing to monetize Reels, and we've seen a lot of growth in TikTok, but there still is the potential for a ban on TikTok as well, which would only benefit a company like Meta as well.
Yeah, you wonder that impact that, all the spending that these big tech companies are doing, Nvidia's results, if we see any pullback, does that negatively or positively affect a lot of these stocks also? All right, great stuff as always. Thanks to Caroline Wood, Senior Markets Correspondent here.